Hello, I'm Hannah. Welcome to Scribe's 5-part series on year end. This is part 1, preparing your accounts for year end. When we talk about year end, it's the completion of the annual governance and accountability return, or the AGAR, for the year the 1st of April 2021 to the 31st of March 2022. The AGAR is comprised of 3 sections: the internal audit report, Section 1, the annual governance statement, and Section 2, the accounting statements. The internal audit process is covered in part 2 of this series, and the accounting statements, or the numbers bit, is covered in more detail in part 3. I think it's important to expect the additional workload involved in completing the AGAR, and if possible, to factor it into your workload or your schedule. I appreciate this is often difficult, especially when you're a clerk working alone on a part-time basis, where there often isn't enough hours as it is. If you can, putting aside some specific time to dedicate to the work involved in the year-end process should help. If possible, allocating some time from now until the 31st of March to prepare your accounts for year-end should pay dividends once in April. Being up to date and well prepared is key, and we can look at how to do that in more detail now. Firstly, to consider, is your data ready? Thinking about the cash book first. This is a record of all your transactions for the financial year. It may be a spreadsheet, software, or you may still use a book. Whatever approach, make sure you're up to date as far as possible with entering the details in. Also check your accuracy. Have the entries been coded correctly, and do they have the correct VAT type? It's also important to ensure you have a complete audit trail with the corresponding documents related to each entry. This is really important for the internal audit. Once your data is up to date, you can consider your bank reconciliations. Again, if these are not up to date, then setting some time aside to do this will limit the amount of work required later that you may find bottlenecks at the year-end point. So for any statements that you have copies for now that you haven't yet reconciled to the cash book, do so. We recommend that you reconcile on a monthly basis, ideally up to the month-end date. However, if your statements end on a different date, it may be easier to use this one. You must, of course, though, make sure that your year-end bank rec goes up to the 31st of March. If you have any reconciliation differences, then also make sure these are resolved. So, for example, if you've been carrying a £10 difference that just hasn't gone away, spend some time now resolving it. Now is also a good time to ensure your VAT records are up to date. If you're VAT registered, you will be governed by your return end dates as to when you need to submit a return. But if you're not VAT registered and therefore just claiming it back, there is no specific date by when you need to do this. We would recommend claiming at least annually, ideally in line with the year end, so up to the 31st of March. This keeps your accounts in line. Therefore, it may be helpful to check your data is correct with regards to the VAT rate applied and that you also have the corresponding paperwork. In order to claim back VAT, you must have an invoice from the supplier clearly stating the VAT number and showing the amount or VAT rate of VAT applied. Lastly, you can also look to update your asset register for any additions or disposals that have taken place so far this year. This is really just about identifying ways to get to as up to date as possible. Next, it's a good idea to give some consideration to the instructions and guidance around completing the year end. This is particularly important if you're a new clerk and have not yet completed a year end, or maybe if you're inexperienced or lacking confidence in the financial aspect of the role. I would recommend downloading a copy of the JPAG Practitioner's Guide. This is invaluable in explaining the elements of the AGAR and how to complete them. It's also a good idea to familiarise yourself with the requirements of the audit you will likely be required to complete and what additional paperwork will be required along the AGAR itself. Again, this is particularly important if you're new or inexperienced, or if the circumstances have changed. Your council this year may need to complete the AGAR or audit differently to the previous year, or you may have moved to a council of a different size that therefore does things differently. For example, if your council is under the £25,000 threshold, you may be able to exempt yourselves from the external audit. The AGAR must still be completed, but it's not sent off to the auditor. It's also important to understand what needs to be completed alongside the AGAR. The additional paperwork will include a bank rec, an explanation of variances, and for those working in income and expenditure, a reconciliation between box 7 and box 8. That takes me on to understanding the accounting approach you are using. Often we speak to clerks who are not sure which accounting approach they are working in and what that means for their accounts. As a quick refresher, receipts and payments accounts is a simple form of accounting in that it records the receipts and payments at the time at which they were received or paid. Income and expenditure accounts record transactions on the date to which it relates rather than when it was paid. Most councils, as explained in the Practitioner's Guide, will work on a receipts and payments basis throughout the year, with the conversion to income and expenditure done at the year-end point. In terms of the approach that your council will need to take, in part, this is determined by the size of the council. Councils over 200,000 for 3 consecutive years must work in income and expenditure. This means that if you go over the threshold for just 1 or 2 years, maybe due to a large project, for example, you would not need to move to income and expenditure. Having said that, councils under 200,000 can choose to use income and expenditure accounting if they want to. This is often the case if the clerk of a council has a financial background. The difference between these approaches and what it means for the completion of the accounting statements is explored in part 3 of this series. Do also be aware that if your council is moving between approaches for the prior year shown on the accounting statements must be restated. A restatement is the amendment of the prior year's figures shown on the accounting statements. The accounting statements require the current year's accounts to be completed and shown against the prior year for comparison. Therefore, both years must use the same accounting approach. Reasons for a restatement include moving between accounting approaches, as I've just talked about. This is to move from I&E to receipts and payments, or vice versa. Errors may also have been identified by the external auditor when the previous year was submitted. Often the auditor will be very clear about the figures that need to be corrected, so you must make sure these are updated. And if box 7 has been changed, that you use the correct opening balance for this year, i.e. box 1. It may also be that the clerk has identified an error. This often happens when there is a new clerk in the role. Scrutiny of the accounts and a fresh pair of eyes might identify something that has been done incorrectly and therefore requires a restatement. Or it may be that the council decided to change the valuation method applied to fixed assets. Generally, it's the acquisition cost, i.e. the purchase value, but a decision may have been made to use the current value, for example. In this scenario, the prior year's box 9 must also be updated. The amendments or corrections to the prior year required for a restatement can be done now. There's no need to wait for this year end to pass. Again, this will save time in April and also mean you are certain you have the correct opening balance for the current year. Do remember that if you do need to restate, that you must provide an explanation as to why this has been done and annotate the prior year column as restated. In a brief summary then, it is important to expect and plan for the additional workload. Some of this workload can be streamlined by ensuring your data is up to date and accurate, and that you understand what needs to be completed and how. Thanks for listening. I hope you found it useful. Do look out for part 2 of the series, which is on the internal audit. Our lovely Jo, who's a CiLCA Qualified Clerk, will take you through how to prepare for the internal audit.